this day, it remains the best deal I've ever done. Probably will always be.
It's the best deal I've ever heard of as well. It just goes to show that you can't ever assume someone's motives, can you? So, Joanne, tell us a little bit of background here, because you've bought 5 businesses. Now, that's pretty good going. Tell us about those 5 acquisitions, and tell us the interesting bits, the bits that everyone wants to hear, the things that went right, but also the things that didn't go so right.
Absolutely. So I started Bell's Accountants 13 years ago now, and at the time it was just me in my little car driving around collecting bags of receipts from gardeners, taxi drivers, and it got to the point where all the receipts and documents were falling out of my boot, my wardrobe and all that sort of thing, and I realised I did have a business here. I needed to get myself an office, and I took on my first team member. So that I now understand was quite unusual, in that it was a chartered accountant I took on, not an admin person. And I think that's because very early on I realised that I was supposed to be the business owner rather than the person doing the physical accounts. So I didn't just want someone to do my billing, I wanted someone to do the work so I could go out and win new work.
That's interesting then. So right from the very start, you recognised that if you were the doer in the business would always be stuck with how much you could do. But if you went out and won the work and other people did it, then the opportunity to expand was always going to be there.
Absolutely. And I think in previous firms where I'd worked on an employed basis, I always ended up in some sort of sales role where I was meeting prospects. And so it was relatively natural for me. But also with accountancy, it's relentless in terms of the deadline. So payroll, VAT, year end.
Exactly.
So you can't go on holiday, So if you want to be a sole practitioner.
So if you are the doer, you're actually you are tied to that business.
Absolutely. Yeah. And that wasn't very appealing for me. So quite quickly on, I wanted a team to sort of take care of the work and to grow it. But that said, acquisition was never on the table at that point. It was just a case of just grow organically, go out, win the new business, set up a great website, SEO. Good thing with accountancy is everyone needs an accountant. You've just got to be better than other accountants. So
and
it's
more visible,
easy to win
more
work.
visible.
Absolutely. Yeah. You've got to be found. So that was my focus at the time. And then the first acquisition really happened quite by accident. So it was just knowing someone who knew somebody. I think it was an uncle of someone's best friend or something or other. And the guy had tried to sell a couple of times to a big corporate, and he didn't like their morals. So he didn't like the fact that they wouldn't guarantee to look after his team and his clients in the way he had done. They wanted to move them out of location and all of that sort of thing. Whereas with me, I was very respectful of the fact that some of these people had been working for him since before I was born, actually, and it was important to him that they stayed on. But for me as well, it's realising in accountancy that those clients, it's just a list of names and addresses without the relationships they have with the staff members.
So looking after the staff actually is preserving the value in what you bought.
Absolutely.
And if you don't look after the staff, maybe you shouldn't have bought it in the first place.
That's it. Yeah, the retention piece. You've paid hundreds of thousands of pounds for a list of clients, but what you have is the relationship that they have with the team members who are left. So yeah, that was the challenge really, was making sure that was preserved. But when we sat down, myself and this guy, and sort of went through the pricing structure and how we did business, it was quite similar. So it was clear that I would be able to pretty easily sort of slot them in our group structure pretty without too much interruption and carry on from there.
Because you were kind of operating in a similar way already. Now tell me if I'm wrong, but was this the deal that you told me about with the terms that were
that's right,
incredible.
Jonathan. Yeah. So this to this day, it remains the best deal I've ever done. Probably will always be.
It's the best deal I've ever heard of as well.
Yeah, it was a pretty good deal. I think it came down to trust.
Yes.
So, and also the motivations of the seller. So the seller was not looking for a big lump sum. He was just looking for someone who was going to look after his practice. So when we started to talk about money and how much, because the business included a freehold property, so it's a freehold property and the list of clients, he asked if I would need to borrow money in order to do the deal, and I said, well, yes, absolutely. I wouldn't have £500,000 in my back pocket. And he said at that point, would you mind if you effectively borrowed the money from me? So rather than going to the bank or a lender, you just pay me off over the next 20 years, and the rate was 2% above base.
If you want to find out how to buy a business successfully, get your free business buying toolkit. The link is in the video description below.
A freehold property. and the customer list, and obviously the profit generated from that customer list, you paid a consideration of 500,000 over a period of 20 years. What sort of security did he ask for? Presumably he's got a charge over the property.
Correct. Yeah, that was all. So charge over the property, but obviously that in fact did not cover the entirety of the amount of the consideration, because a proportion of it was to do with the business. So that was sort of just done on trust factor, but he knew that the bulk of it was secured against the building, so it wasn't as much of a risk.
And you could always refinance the building in order to accelerate his payments, perhaps for a discount. Then sort of create another sort of 20, 25-year term.
Absolutely.
With the mortgage.
Yeah. I think he actually put conditions in the agreement that stopped me from paying it earlier, because it just wasn't what he wanted. He wants to know that he's got a monthly income forever.
It just goes to show that you can't ever assume someone's motives, can you? And you know, people who've never bought a business before believe that the seller is all about wanting all the money on day one because they met someone once who wanted all the money on day one. And of course there are people who want that, but then there are people at the other end of the spectrum who are quite happy to accept it over a 20-year defer payment.
And I have met accountants that have said to me, thank God you're here. I've got these clients, and it's horrendous. You know, I'm 80 years old. I can't look after these clients anymore, but I feel a sense of responsibility to them. They've become friends of mine over a number of years. So thank God you're here. And I found someone I can trust to pass this business on to. You know, they're not even really considering the value within the business, because they've made their money over the years from doing what they're doing.
Absolutely. So they've been satisfied with what they've got, and now it's a case of passing the baton to the next owner and looking after their staff, as you said, and receiving something for that. But it's not the be all and end all, is it?
No, absolutely. Yeah, it's not their main priority. The main priority is finding someone they trust to take the business forward, and actually being a part of something as well. A lot of them, it's a legacy piece, and becoming a part of something that's growing and, you know, has an ambition to become a large organisation, albeit a group of smaller practices within a larger organisation.
People believe in you. I think that's what it is. They look at you and they say, yeah, this is someone I want to back. Do you feel that? Or is that just? Yeah.
No, I do. I think there's another element of, I think I'm relatively unthreatening. I think to some extent, if you're confronted with maybe quite an aggressive business person, then maybe their wall would be up slightly more, and they think, well, I've got to watch myself here. Whereas with me, it's, you know, oh, it's just Jo, you know, she's fine for it kind of thing, and she'll look after everyone, and there's a I'd like to think a calming aura around that, you know, it'll all be all right. And I think that actually comes with experience of acquisition as well. The more deals you've done, you know the process, they don't. So the fact that you're going in and saying, well, yeah, this is how it's going to work, this is how we will contact the customers, this is when they'll be told, this is how 2P works. So 2P is the piece of employment law regulation to obviously bring all of your staff on board with the buying company, and they don't know what any of that looks like. So if you can sort of walk someone through it and say, look, this is how it will happen, it's actually a big relief, because they think, oh, this person knows what they're doing. You know, I'm not going to have to call the shots, and I'm not going to have to say what's going to happen.
It is quite interesting. I always find how in an acquisition you'd expect the seller to be driving the process, but in actual fact it usually ends up being the buyer driving the process, driving the timetable, pushing everyone towards the deadline, and the seller somehow seems to take a bit of a back seat, almost like once they've signed heads of terms they feel like the deal's been done, and they can ease off a little bit. When in actual fact, that's when the work really starts, isn't it? And then the work really, really starts once you've bought it.
Absolutely. Yeah. Sort of getting it on board with your structure. I think we've got it down to quite a fine art now. It's about a 12-month process to get it sort of digitalised and to get all of the clients where they need to be, to get them paying direct debits, because a lot of the time there's a lot of slow payers. There's a lot of people still dropping sort of manual books off and all of that. So you've got to do the change management piece.
Of, receipts.
Absolutely. You've got to do that change management with the team and the clients. So you've got to get it all to where it needs to be. But I see it in my simple-minded way of looking at it. I look at it a little bit like property, in that I get the ones that maybe are at a lower multiple because they need a bit of work. And then the idea is that if I can do them up, digitalise them, make them paperless, upskill the team, make it run independently of the owner, then I'm adding multiple. So I should be able to sell it for a better return.
Yeah, so it's being prepared to put the work in that maybe others would not be prepared to do. If you want to buy the perfect business, you've got to pay a higher price, or you can pay a lower price and put the effort in, and that's what you're prepared to do.
Absolutely. And I've got a team around me who help with that. So it's not just me going in and trying to deliver it. My heads of department will go and sort out their own processes. So the head of admin will go in and deal with all the onboarding. Finance will go in and get them all on direct debits, all of that kind of thing. They know what's expected.
So that was your first deal. And you probably didn't realise at the time what a good deal it was. No. A freehold property, pay for over 20 years, add a business, which is absolutely fantastic. And hopefully it's paid for itself in the last 6 years, I would imagine, anyway. So effectively it's kind of free from now on. So what happened next? What was the next deal?
So the next deal was a much smaller one that we just absorbed into the existing infrastructure. And again, that hadn't really occurred to me at the time, because once I got onto the acquisition path, I thought that what I needed was an accountancy practice in every county. Okay. So I was looking to sort of spread out, if anything. Yep. But what came up, and it's always been opportunist. I've never sort of used a broker or anything like that, was one that was actually very local to my original practice, my organically grown one. Just a lady she effectively wanted to move into doing sort of FD work for charities rather than actually small business accounting. So she had a block of, gardeners, those tradesmen, those kind of clients that we specialise in, that she wanted to let go. So we just absorbed them straight into the office. And for us, again, we didn't need any of her overhead. So she would have had her own software licenses, her own professional indemnity insurance. We didn't need any of that. We just took the clients, absorbed them into the existing office, and it was pure profit.
Well, I was going to say that would be very profitable, because presumably you didn't need any additional people. You've already got that redundancy period, that time built into each. Everyone's got a few extra hours a week spare, and you can bring the work in without any overheads whatsoever. I guess then the majority of that income just falls to the bottom line, doesn't it?
Absolutely. Yeah. And that deal was over 2 years. So a quarter of the money down, quarter after 6 months, quarter after a year, and then the remainder in year 2. Yeah. But, we had the full amount, if you're talking a 1 times multiple, on the bottom line within year 1, really. Yeah. So it was.
And is that what it was? 1 times?
1 times.
Yeah. Again, you see, I think people just watch too much Dragon's Den. They think that everyone's going into double figures, and everyone knows the value. And we all know that money's important, but it's not the most important thing for many people. And actually, on the priority for sellers, money can come way down. Getting rid of the stress can be way at the top, or family reasons, or divorce, or retirement. All those reasons high up the list. And quite often, especially if someone's earned good money over the years, it's not all about cashing in on that big payday. It's about doing something else, like retiring.
Absolutely.
Or doing something, a different role. So that was deal number 2. Do you want to take us through all 5, or
Yeah, no, I can do. So deal number 3, that was the first one where I actually got business partners involved. So I, up to that point, had obviously funded the deals, sort of self-funded, or they've been over a longer period. With this one, I found a couple of associates who had seen what I was doing with my main business, Bell's Accountants, and thought, this looks good. Maybe we could help Joe out by putting some actual cash in, which would help me target those larger practices, really, where you would be required to put some money down. And for that, we decided to split 60-40 arrangements. So I would have 60% of the shares, they would have 40%, but they would fund the deals that we were doing. And yeah, that also worked really well. So mine was sort of sweat equity, theirs was cash, but I did all the negotiating with the previous owner, took care of the deal, the legal side, and obviously the work that went into the acquisition itself with the staff and all of that kind of thing. And yeah, that was also an effective way.
So actually another classic way of not having to use your own money and ending up with 60% of the future profits and the future sale value, but not having any risk on for yourself, financial risk yourself.
Absolutely, yeah. I effectively, they only made money if I made money, because there was no debt or anything like that attached to it. It was just they were going to take 40% of the profits, but there's always the option to sort of buy them out later down the line, if you know what I mean. And then the deal after that was the most challenging one. So deal number 4 was the one. And interestingly, with you saying not all owners are looking for the cat, that was the only one where I sensed they were just looking for the cash. And it was the one that didn't work. It was the one that was really, really tough. Yeah. So the list that I bought was not the list for all sorts of reasons.
So this is the customer list.
That's right. Yeah. So the list of clients, some of them are disengaged years previously.
So they gave you a list of customers, of which some probably had expired.
Yep. Some were misrepresented in the sense of that this is what I was told they were paying, and they were actually paying something significantly less. Yeah, there was someone who was associated with the business who had left some months earlier, who then took clients with them. So that was a really tough one, because I'd accounted for all that in the asset purchase agreement, in the sense of we're not going to pay for what we don't get. So that was all sort of fine, apart from the fact that you still have to fight it. Still going to cost you legal fees, time, energy. Actually sort of getting closure on what the final payments are going to be. But what I hadn't considered is what it did to the profitability of the business and the costs of it not being what it had forecasted. So you draw it all out, your forecasts and cash flow forecasts, and say, well, you've got this number of staff, you've got this amount of revenue.
Oh, I see what you mean. So you're saying that even though those sort of non-existent clients you might end up not paying for, you've still got an overhead as if those clients existed.
That's right. So effectively, the business I purchased was loss-making, really significantly loss-making. And a lot of the team members who were there had many years of service. So even to reduce those costs, there's a redundancy cost associated with that, which needed funding. I was only fortunate, really. I think that because it was part of a group, the profits from the rest of the group could, to some extent, prop it up while I tried to kind of.
It's not ideal, though, is it? But that's great for survival. But it's still. It's throwing good money after bad, isn't it?
Big pain, yeah. And there were also some cultural issues with that practice as well. That maybe the team weren't as on board as maybe I initially felt they were, in terms of the way we did things, and I think that's all to do with how they were managed previously, to be honest. Some of that stuff is difficult to reverse if it's really ingrained. It's a struggle for those people to trust leadership, because previously they've been looking for someone to blame and all of this, and to get somebody out of that mentality is very difficult. So the eventual outcome of that acquisition was that I sold off that particular branch. So I fixed it as best I could. I sucked some of it back into the main group, so some of them were moved, relocated, and the rest was sold to another local practitioner. So I made sure that what he bought was good and profitable and clean, and what I kept was, and I split it in a way that made sure that was the case, kind of thing. Yeah, and it was the only real sort of solution I could see, and that reduce the overhead as well, because what I was left with just got absorbed into an existing office, so I no longer had the additional premises costs and all of that.
I see. Okay, so not an ideal scenario, but you recovered it as well as you possibly could.
Yes, I think so. Yeah. And I think learnings for me is just to do actually a lot more due diligence, because I think where I'd always gone for the model of buying goodwill and assets, not companies, I didn't see the need to do as much goodwill, and actually
as much diligence.
As much diligence. Sorry, I didn't see the need to do as much due diligence, because I wasn't buying a company, so you haven't got all of the company liabilities, but you still need to make sure that those clients are actually engaged clients.
So tell us from an accountant's perspective then, what you feel that the savvy business buyer should be looking out for when buying a business.
So I think, first and foremost, it's profitability. That's ultimately the reason why we're all doing this. So you want to make sure that if it's not profitable now, you sure as hell know how you're going to get it profitable. So what is it that you're going to be able to strip out, and what's the cost of doing that strip out, especially if it's staff related, to make sure that that's making the kind of returns that you need to make, really. And I think for me, over the years, I've become a lot more selective. I've realised that actually there's a lot of practices out there for sale. There's a lot of businesses for sale, and it's more about the ones you say no to than the ones you say yes. Whereas maybe previously I just saw everything as an opportunity. And I think there's a saying, isn't there? If you drink from every cup you're offered, that's how you get poisoned. And I think that's very true.
I haven't heard that one.
You've not heard it.
That's good.
It definitely rings in my mind. And, and I think to myself, well, actually, what is this deal bringing to the table? By way of returns, talent, assets, whatever it is, you really need to be sure.
So it sounds to me like you depersonalized it. And instead of seeing everything as an opportunity, which is the sort of the entrepreneurial side of your nature, you now see it in a very factual numbers sense.
Absolutely. And I think as well, me personally, I'm a fixer. So I enjoy the challenge of fixing something, but you then have to question why. When there is stuff there that actually doesn't need fixing, maybe just needs tweaking or just improving slightly, you don't have to search for something that's absolutely on its knees and chaos, and you've got to put so many hours in.
This is the thing. I think there are a percentage of the business buying population that have this fixed part to their personality. But they're definitely the harder businesses to buy. I mean, I always say you buy this solid, profitable business. The turnaround thing, can be fun in a sort of strange, warped way, but it's hard work. It doesn't always work. It always takes longer than you think it's going to take. It always costs more than you think it's going to cost, and you might not get what you end up with, and you may not have paid very much for the business, but you're going to pay at some point with time, energy, effort, and maybe money. Sometimes it's better to buy the solid, good business, pay more for it, but know exactly to a certain degree what you're getting.
Absolutely that, and I think do your due diligence. Back to that again. No matter whether you're buying goodwill and assets or companies, do that due diligence, and an accountant can definitely help with that. What I enjoy about accountancy is unpicking a set of accounts, because it tells a story. When you look at someone's accounts, there's all sorts of questions that come about as, why have those debtor days increased? Why are the customers slowing down? Why do the VAT returns not match with what they've said the turnover? All those, and quite often there can be a perfectly reasonable explanation for all those things, but you don't want to not ask the question, because that's really how you potentially uncover any skeletons. Oh yes, I forgot to tell you, we lost that $100,000 contract in the middle of last year, and
of course,
all those.
Well, they say that sellers lie by omission. They just miss things out. So it's not a direct, blatant lie. They just don't tell you the things like, we lost that contract last year, but we forgot to tell you, and you've just assumed that we still have it.
Absolutely, and a lot of the stuff that's been omitted in the deals I've done is actually not financial stuff. I've been pretty lucky on that. Apart from that one deal we spoke about, it's more the stuff that needs fixing. So they've maybe omitted to tell me that 2 or 3 customers have been in mid horrendous investigation with HMRC or something like that we've had to then step in and take over. And that's possibly all part of the stress of the reason they were walking away from it in the first place.
And the concern that HMRC might expand that inquiry into all of their clients. It's like, let's get out of this burning building now.
Buying a business is a roller coaster, which is why you need a lawyer who knows what he is doing. So why not use mine? His name is John Andrews, and you can find his contact details below this video.
So most people who get into the world of business buying are optimistic, have an entrepreneurial side to their nature, and they want things to work and they want things to be successful. So how do people balance that very positive side of their personality with the realities of business buying?
I think it's the numbers. That's what bridges the gap. It really does, because the vision's one thing, but if you run out of money, the wheels fall off of everything at the end of the day. So it has to financially make sense before anything else. It's all very well buying a business based on its potential, but that's all if but maybe. Am I able to get it to that point? Am I able to do that turnaround? Actually, what is it now, and what's the true gap look like in terms of the funds that's needed? Because even if you're making improvements, even if it's profitable, but you want to make XYZ improvement, there'll be a cost to that. So
Absolutely.
you'd have to account for that, not just, have enough money for the down payment or find, the money within the business as you teach, Jonathan. It's also about what do I need to invest, because for me, upskilling the staff, getting new software licenses in for them, and all there's a cost to all of that. A lot of the time the businesses that I buy, the overheads are pretty much as low as they can go because their accountants are running them. I've bought ones where they take their own bin rubbish home because they don't want to pay for a waste license to the council and all sorts. So there's not going to be a huge amount to cut.
I hadn't heard that one before. Yeah. Oh, that's so funny. I mean, I didn't account for the cost of rebranding.
Yeah. Yes. Absolutely.
And signage isn't actually massively expensive until you need special lifting equipment to put the sign on the building over and above the glass canopy, and it all needs to be scaffolded first. Didn't account for that. Yeah, staff uniforms. And you've got to have all these different sizes and all these different styles for hundreds and hundreds of people. Oh my goodness, that suddenly goes into six figures when you're taking everything into account. So it's very easy to miss one thing out of your plan and suddenly have a cost that you were not expecting.
Absolutely. So that's why sort of forecasting it out, doing your cash flow forecast and actually ringing around and getting some quotes and things like that's a really useful thing to do beforehand if you possibly can. I mean, one of the things we spend money on is the premise itself, because quite often you walk into these offices and there's low-hanging ceiling fans and, wall-to-wall cabinets of files and all this, and it's very dated and old, and old writing desks, nothing matches. And for us it's quite important for pricing as well with clients. I feel if they walk into a nicely presented smart office, they know that they're coming in to see a professional. They know they're going to pay a certain amount of fees. They're not expecting to quibble over a couple of £100 on their tax return and that kind of thing. And I find as well it also changes the whole way the team feel about the practice and how they conduct themselves.
Maybe easier to recruit as well.
Absolutely.
Someone comes in for an interview, they're sitting in reception and it's like falling apart. And it's like, do I really want to work here? Maybe I should go for some more interviews. Or I like the look and feel of this place.
That's right, yeah. This owner obviously invests in the team, it invests in the premise, and this looks like a nice place to, you've got a nice water machine, you've got a coffee machine, all those things. It makes a difference. People spend so much time at work, so that is something we invest in. But again, you can have those hidden costs, as you say, John. As soon as you start taking plaster off the wall and it needs rewire, needs replumb, needs this, needs that, and when you do things properly, pat testing and all that, you think, oh no, all these appliances got to go, get new ones.
How do you keep yourself positive? How do you keep yourself focused on the positive when the negatives can take up so much thinking time?
Really good question. Yeah, I mean, I'm naturally a positive person anyway, so I don't find it difficult to keep the positives in mind. I think otherwise you'd just stop before you'd started, probably just in business generally, let alone the acquisition trail kind of thing, because there'll always be challenges and curveballs. But I think it's just focusing on, like you say, on the good things that come out of it, and there are many. We exactly as you say, we've expanded into new regions, and you can do that organically, but it's really hard and really slow. You're not networked in that area, you're not known in that area, you don't have any revenue with which to pay for a premise there to have meetings, and so if you just buy a practice in that area, even if it's a small one, you've got a starting point. You can then build on that. You can ask for referrals from those customers, you'll have a web presence, you'll have all of this. So absolutely that it speeds it up. And for us it's also been talent acquisition. It's really difficult to find good talented team members, seemingly more now than it ever was. There's a real sort of gap there, and through the process of acquisition we've acquired people, I should say, that we never would have got through normal recruitment. Because there's one particular example in our Wallington office which we just purchased recently. Brilliant senior technical accountant, but he's a family man. He never would have moved on from that office because it was 10 minutes down the road from where he lived, so he liked the fact that he could pick his kids up from school and all of that sort of thing. So he wouldn't have been looking for a new opportunity, so to speak, but he's now on board as part of our team, and because we're digitalised and paperless, and he's able to be of assistance across the practice, not just in that office. We can utilise his skills sort of all over the place. So that's a really, really good positive as well, the people that come with it.
Yeah, absolutely. And these days, you can let, like with this example you just you've just given us. You can take someone's skill set that was confined to one office and make it a skill set that's company-wide and impact future acquisitions as well.
Yeah, absolutely. And you just come across things that you would never have come across client-wise as well. Opportunities to acquire clients in particular industries that maybe you haven't worked with before, and then you can build on that and make a specialism from it and advertise it and all that kind of thing. And definitely, the speed of growth as well. There's no way. I've been doing this 13 years now, but I've bought practices that the guy's been doing it 20, 30 years, and the business is a sixth of the size of what ours is. And it's because it's limited by what that individual person can achieve and oversee. And, if you don't go into acquisition and you don't...
So the owner's
managers,
the bottleneck in the business. We all are to some extent. But it's taking yourself out and saying, actually, how can I use my skills, acquisition skills, to grow the business rather than being in there every day answering the phone.
Yeah, and I think if you're a business person, you're probably naturally very, very active and very hands-on. So you need to give yourself something to do so that you're not interfering and you're not being the bottleneck. And if acquisition is it, then that's great, because that takes a lot of time and energy, and you can sort of go off of that, and you will naturally put in place what you need to put in place for the operations to run without you if you have something else that you need to do and that you need to focus on. So it definitely helps. I think if you're sitting at your desk, you just get dragged back in, find yourself watering the plants and think, what am I doing this again for?
This is true. This is true. What would you say to someone who's thinking about making the first deal or thinking about getting more involved in acquiring a business? What would you say to them?
I would say that if you follow Jonathan's methods and Jonathan's strategy, from what I can see, you have absolutely nothing to lose. So why would you not do it? We had a chat earlier, didn't we, Jonathan? I find it amusing to some extent when I listen to Jonathan's presentation that the way I've built my business, I've broken a lot of the rules Jonathan set down because it was my business in the first place. I was doing everything. Naturally, I'm the one dealing with the operations. I've used my own money. I've borrowed money. I've personal guaranteed it. I've done all of those things that, had I known then what I know now, I wouldn't have done. And I've been lucky and fortunate, and I've not been punished for those decisions. I've got away with it, so to speak.
Sure.
To some extent, I've got away with it through my sacrifice, because I've worked every hour God has sent to make sure it works, because my neck was on the line. But looking at it now from a different perspective, using the money within the business itself to raise the funds, using other people's money, all of that sort of thing, well, then it's not the risk that it would have been.
It really depends upon how many tools you've got available. So if you've only got one tool, then that's the only tool you can use. So if the only thing you know about buying a business is you go and borrow money from the bank and you give that money to the seller and that's it, then that's what every single one of someone's deals will look like. But if you've got 20 different strategies, then you've got a different strategy for each situation, each occasion. And like you said about personal guarantees, putting your own money, all of these things. I think everyone does those things to some extent, and some it doesn't work. Some, you, as you say, get away with it. But if you don't have to do those things, if there's like a better way of doing things, then you've got an option that allows you to sleep better at night.
Absolutely, and you don't know what you don't know. So it's about those advisors around you. When I've searched for advisors, be that solicitors or business coaches, and I want to find people who have done what I want to do so that they can actually advise me. And that's been the case for a lot of the clients that have come on board with Bells. They want to work with an accountant who's done mergers and acquisitions, who understands mergers and acquisitions, who's made them work. They don't want someone who's worked their way up within the practice as an employee who actually can't advise them from a business perspective. So for people joining your mastermind classes or whatever, there's a lot of reassurance in that. They can just speak to someone who's been there and done it. Yeah. And the numbers say everything you need. Once you take the emotion out, which is what we were saying, take that out and just make sure the numbers are absolutely rock solid, you can't go wrong, really.
Yeah. Fantastic. Joe, what a great discussion. What a fantastic conversation. And we'll put a link to your website in the description so people can get in touch with you if they need some accountancy support.